For the first panel of the afternoon, it's called Building Differentiated Chains in a Crowded Market. Moderating will be Wilson Withiam, who is head of research at Syncracy Capital. Take it away, guys.
Perfect. Thank you so much for the intro. Just a quick background. I'm head of research at Syncracy Capital. Syncracy is a long bias hedge fund that makes concentrated bets in what we think are the secular winners of the crypto economy. So naturally, we spend a lot of time looking at what are going to be some major market shifts, and the area of the evolution of smart contract platforms and rollups is of particular interest. So that's why I'm incredibly excited today to talk to our panelists about the current status of the blockchain infrastructure market. So really quick, love to go around, just quick intro, elevator pitch from everyone, and we'll start with Ryan here.
Yep, I'm Ryan Servatius. Good to be here. I'm the head of partnerships at Mysten Labs. Mysten Labs is the creators of the Sui blockchain, as well as a number of other protocols such as Walrus, Dbook, and Sui name service.
Hi, my name is Dan Simerman. I'm the co-founder of a trading platform called Mintify. Before that, I've been working very closely with protocols, so building and architecting protocols. So I'm going to be taking kind of two sides here, thinking about an application developer that's deploying onto these networks, but also thinking about how these next generation architectures might affect some of these questions that we're going to be discussing.
Hi, my name is Rio. I'm a founder of the Oasys chain. Initially, we started as a gaming-focused chain backed by the Japanese gaming giants like Sega or Square Enix, those guys. But now recently, we're focusing on tokenization of the Japanese and Asian assets. For example, the real estate or low cap, stock, Japanese stocks, stuff like that. That's Oasys. Thank you.
Hey, my name is Alan. I'm the founder of EVG. EVG is basically like one of the larger and older holding company in Asia with a couple hundred people between different subsidiaries ranging from media, fintech, AI lab, gaming, etc. So we are also one of the biggest developer. We've done in the maybe last 2 years 700 smart contracts across 10 chains, and every year probably 500 million on-chain transactions across our products. Yeah. And we recently just announced our own consumer-focused chain for Asian developer as well. Yeah.
Perfect. Thank you. All right, so to set the stage for the conversation, really, blockchain infrastructure and the FAT protocol pieces have been one of the defining investment themes of this asset class, particularly in publics, over the last several cycles. However, it kind of seems that we're reaching a stage where maybe we're reaching a bit of saturation in the amount of infrastructure that's out there, where every single L1 and rollup seems to be moving towards a similar end game. So I guess the first question I want to ask each of you is, what's the current? How would you characterize the current stage of the market? Are we in a stage of innovation, or are we entering an era that's of diminishing returns? So Alan, I want to start with you for the bird's eye investor perspective.
Yeah, I think very specifically talk about all the chains. I think the game is still pretty early. My contrarian view is that if you look at most of the chains today, if you go on and look up the number of users, most of them are really, really small, right? It looks like a Series A company in most of the actual states. And I do think that you're going to see a lot of very different purpose-built chain for different things, right? Like I think all of this was very hyped up during the announcement of Robinhood and etc. I think there's going to be a lot more coming out as well. Fundamentally, how we kind of see chains is if you're a purpose-built chain, you can think of almost like a cloud computing infrastructure, and many companies will own their own cloud, right? And I think whoever that has distribution and specific use case where they have advantage in, they will be looking at potentially controlling their own destiny and controlling their own economic environment as well as the computation environment, right? So I think is going to happen quite a bit over time, but obviously the key question is how many of them are going to really survive over this period of time. And I think scaling the 0 to 1 is relatively easier for a lot of these groups, because I think if you look at most, especially in Asia, if you look at most of the group that is announcing chains, these are pretty established, I would say, groups that has millions of users. Like we have 10 million users across our existing product already. Mochaverse announced Mocha Chain. They have a bunch of users across the existing product. So I think that is relatively easier to bootstrap. But then I think the key is how to build more sustainable use cases and really a group of developers that really love that environment and almost like a cult-like following, right? And over time, and I think that is something that is difficult for a lot of people. And I think just like the topic, I think the key is also a lot about differentiation, like how to build in unique selling points that matters to developer. What kind of problem you're solving for them? Is it sourcing liquidity? Like Sui obviously has a lot of liquidity on top, right? Are you sourcing liquidity from them? Are you, have more targeted and precise user profile for the environments? So I think that is like solving real problem for developer is going to be what's going to stand out. Instead of, I think historically it's a lot more about they just look at the market cap and just say, you know what, this is the obvious name. Let's go run with this field. I think everyone's realizing the key here is, at least I think for the more seasoned developer, the criteria is getting clearer and clearer over time. Yeah.
Gotcha. Anyone want to add to that?
I'll add that we're nowhere close to being at maturity. We've got 3 billion all of a sudden this summer rolled over to 4 billion in assets. This thing, it's on its way to trillion. Let's add 3 zeros. We're nowhere close. The number of developers that are in this game right now are a small fraction of what's participating in big tech, enterprise SaaS, even game developers. There's more dang game developers right now than there are blockchain developers. And so we are very, very nascent in this stage, and I think there's plenty of room for innovation.
Perfect. So looking at that, as we're looking at this, we're talking a lot about differentiation. So specifically when we're looking at some of these chains, a lot of them tend to bootstrap with the same set of applications. They're financial rails, so every chain needs an exchange, a lending platform of some sort. And from a user perspective, they can tend to look somewhat undifferentiated and almost interchangeable to a degree. So what would be a way that, how can you really differentiate your chain in this environment? Is it something where you want to go after a specific vertical? Is it enshrining foundational applications within the network? Is it something else? And Rio, I want to start with you, having built more gaming-focused chains.
Yeah. I think differentiation of the chain is currently really tough. Or generally, of course, the technology stuff is really common. But I also believe the future is like privacy, ZK or something. But it takes time, I think, to adapt. But the things we need to do is survival. We need to survive in this cycle. Then we just need to how can I say vertically or differentiate. So ours we were focusing on the gaming last 2 years actually. Then we onboarded a lot of game companies like including the giants like Sega, Ubisoft, blah blah blah. But those really tough time last year actually. A lot of the game launched, but couldn't attract a lot of users because that was still Web 2 centric games. I think the next phase is like make them to launch Web 3 centric game. So like token is a center. Web 3 how can I say organic application. Then I think more than that, and we are focusing on Asian tokenization from Japan actually. Actually, the geographical strength is very important. Like in Solana is focused on North America, right? So think that'll be the strengths of the different kind of for the chains. Then what I think about the differentiation of the chain is like about the origin of the business. I think that for Binance, they have a lot of the user base, right? I think they can use their revenue for buyback. So I think that their original business is also could be their differentiation. And another how can I say vertical differentiation is as I said it's a geography. That's my thoughts.
Yeah, go ahead, Dan.
I think sometimes it's helpful to remember that these are not companies selling products and services, but they're protocols playing something akin to standards games through ecosystem development. So I think that the non-technical value proposition is going to win out. privacy is great, but privacy close to institutional adoption is better, right? We're kind of in a paradox here where the networks are good enough, they're fast enough, they're scalable enough. Maybe in another question we'll talk about some of these innovations that are coming down the pike that are going to challenge these existing architectures. But I think what makes one chain different from another, or why you'd want to deploy to it as a user, has always been increasing the probability of success. Doesn't necessarily mean a grant. It could mean access to venture capital in your network. It could be distribution. It could be marketing. Time and time again, after the Ethereum ecosystem and after the Bitcoin ecosystem, groups that could support early application developers by thinking more in a ecosystem capacity rather than a business development capacity have consistently done very, very, very well. And I think we're going to continue to see that differentiation where it might be we're the gaming chain, or we're the institutional chain, or maybe we're the chain based in a certain region. And I think that's going to escalate as we see the propagation of networks. So I actually think we're going to see millions and millions of networks. We'll be launching networks like we launch websites today. And we can kind of talk about that a bit later.
Perfect. Actually, I want to, Ryan, your take on this as well, because Sui has built out, or has worked with some close infrastructure partners to help expand out the resources available to some of the applications building within the ecosystem. So how have you gone? How has Sui thought about scaling up its demand side originally, and how has that evolved over the last few years?
Yeah, so a lot of people know us as a gaming chain. Because if you're building a game, Sui's a pretty good one to build it on because it's so dang fast and it's very programmable. One of the things that we've observed is that market leaders tend to coalesce liquidity. So this is one area where I might disagree a little bit about there being millions of chains, because you still have to have that essential liquidity concentrated, we found, for it to be useful. And so the key dimension here, and I agree with just generally with the sentiment that the lesser tech loses all the time, it also wins all the time. And so the key differentiating factor is distribution, right? Can you actually get enough developers to build interesting stuff to actually make it useful? This is the key thing that everywhere you're going to go in tech, not just here, this is it. So we look generally at three major defining dimensions of this particular period of time. The first is AI. The second is this massive wave of asset tokenization, going from like 3 trillion, 4 trillion in assets to 100 trillion. This is happening right now. And the third is deglobalization. So the point that Rio made about nation-state level blockchains, very, very important to be paying attention to right now. So I think these fundamentals are really critical. And we're at a point where I agree, there's a lot of blockchains that have capability. And those that have been able to coalesce those developers and that liquidity are going to be ones that are going to jump.
Just 2 points on that. Liquidity is a core value proposition until it's not. And in a post-layer 1 world, you're not going to be playing liquidity games as an independent chain. You're just going to be sourcing liquidity from these dominant environments. So I don't think I think today that's the problem. It's like the cold star problem. How do you get applications on? Well, you attract them with liquidity. But I'd say in 2 years from now, once you have these kind of succinct zero knowledge chains or proof-based computation environments, you're not going to be a network necessarily trying to attract liquidity in the same way.
So I want to expand on this a little bit. So one of some of the recent successes we've seen, at least at the chain level, is really projects that started out as an application and then branched out into an ecosystem. So the prompt example is Binance launching their chain, expanding through a BNB chain. You've seen the same with Coinbase and Base, and most recently we've seen it with Hyperliquid build a leading perps DEX and expand into an application ecosystem. And so I want to explore this product first strategy. And Alan, I want to hand it over to you on almost from like the investor side, but also builder side. Is this the right way to think about driving a wedge into the market and then expanding from there? And on top of that, should founding teams consider building the first app on the platform to bootstrap demand?
Yeah, I think everybody like to be a platform first, but I think platform first is not a strategy. It's actually a privilege, right? Like you really gotta earn that in the process. Like if we go back, like in my like kind of thinking, if you think about chains as cloud infrastructures, right? Almost every single bigger or established cloud providers in the world, they were application company, right? Microsoft built operating system that billions of people use before they have the Azure, and Google same thing, Alibaba the same thing, Tencent the same thing. So even SoftBank in Japan is the same thing too, right? They have telecom that created distributions, and then the Yahoo Japan, and then they created their own cloud. And so, and I think obviously in Web3, like a lot of chains like approach was just like, hey, we're a platform, we're infra, so we're not going to really get involved in that. We try to stay out of it. We try to be neutral. But I think this cycle is like you're seeing some kind of mean reversion happening, right? Like you saw, Hyperliquid you mentioned, or Ethereum now being a chain as well. Because once you can prove you can build distributions, that is the biggest value add to any developers, right? Everyone think like we've been developing so many different chains. We actually probably one of the very first in Sui back in late 2023. So the whole promises you can get to a chain is like, if I can lend you users, then you can probably raise money. Then you can probably go to listing. Then you can probably get KOL to comfortably show about it, or then you might land some partnerships with bigger groups. You all started with users. You actually don't start with narrative, right? I think narrative is what capitalists care a lot about, but from an actual developer standpoint, if I'm not gonna really land users from your chain, it doesn't matter you give me 100K grand, it's gonna run out, right? So, and I think that's historically one of the biggest problem is the chain itself don't even know who the users are. Like if you think about like going back to the whole cloud business metaphor, Facebook definitely knows like all the users, right? Like Microsoft definitely know all the users. They label them very well, they tag them very well. They have all the publishing platform like Google is Google Essence, right? So the pitch isn't just like use Google Cloud, but also with Google Essence to help you land the right target audience. But if you think about Web3, like most of them is just a wallet. Most of them came probably to the so-called chain through airdrops or through some incentive campaigns. So historically, like it's not a question that even the head of ecosystem could possibly answer, really. So it's a little bit more like, yeah, join a hackathon, we'll help you share about it, we'll give you a retweet, right? But who are the audience you're actually going to attract from the retweet? And if you cannot attract users, then I don't think your game could go very, very long, right? So I think that is like almost I think there's a default like moving forward. You'll probably see a lot more chain really getting much more involved in the whole building out the dApps, regardless is them building it themselves internally, or they're sitting teams, or they set up an interest studio to do it. They almost have to be taking some sort of a vision of what kind of content you want to be. And I think if you compare the ideology here, I think a lot of platforms is really afraid, especially Web3 companies, really afraid of going to the whole content business. But also look at the most successful consumer companies, right? Even look at Netflix, right? They really took off after they decided to create Netflix Original with House of Cards, with all these contents. And I think that is almost like a game that's default moving forward. And a lot of chains going to have content first, create distribution, and then they're going to think about if I can be successfully creating distribution, then maybe I can enable more people to create distribution over a period of time. Yeah.
Perfect. So moving over onto the application side. So Dan, pretty curious on Mintify, when you're looking at potential chains or other applications to integrate with, what do you tend to look for? What do you weight more? Are you looking more, you're looking for a base level of performance? Are you looking more for user distribution? And then on top of that, specifically, what is it that you're looking for in a particular chain? And do you want to be early, or is it better to wait until there's at least some adoption on these networks?
This is kind of a silly answer, but like I like to be able to coordinate very closely with a protocol. To me, that's very important. Getting their support, again, is the most important thing. When you're an application developer, up until maybe about a year ago, going from one EVM chain to the other, like the performance didn't matter that much. Now you've got the mega ETHs of the world where you can see this like substantial real-time transaction system. But I'd say for us, it was how easy was it to build on. That was really important. Like the overhead cost, which is increasingly going down as long as it wasn't too expensive. But it was really just, would they help us grow and connect and be supportive? Because when you're talking to hundreds and hundreds of chains, there's always going to be a new chain that's cool or interesting, and you really want a sustainable partner. So we liked them. Like sometimes there's projects like ours where it's an ecosystem-specific project that doesn't work with other ecosystems. Our model was we wanted to build a really good platform that connected to these other environments so we could display their assets, so we could trade them. And in that world, connecting with the content creators that we're building, that was incredibly important. Asking for, if we had a technical question on how to integrate. It was kind of like the non-tangible things, because we have a very good tech team. So we never had a problem building. It was just, I'd say, like, really support.
Gotcha. Running up to about like a little over 5 minutes left. So one question I want to get to is you're starting to see a lot more fintechs and centralized exchanges moving more of their operations on chain. And as you're seeing this, in many cases, you've seen them build their own networks, like Robinhood's proposed L2, Coinbase's Base. You've also seen on the other side, Bybit start launching their DEX platform on top of Solana. So as you're seeing this evolution, are you starting to see this as something where, say, Base keeps most of the activity within its network? Is this something that you would see more and more activity go there, or is this something that is just net beneficial and introduces more and larger customers into the crypto economy's user base? So Ryan, I want to start with you. What kind of unlocks are we seeing here? Or are you seeing this more as like a competitive type of scenario?
It's a really interesting question, and it's one that I think that we're at the point in the game where the larger players, this is why this question about there being millions of blockchains, I actually think that these are going to coalesce with a few, right? Now, I could be wrong about that.
I think there's going to be millions of decentralized networks, whether we call them blockchains or we call them kind of post-blockchain, proof-based, environments, is up for debate. But there's going to be, like, you're going to want to launch, like, Robinhood didn't launch a network on Ethereum to scale Ethereum, right? Not, you could argue maybe based a little bit, but like most do it because they want, like you said, to build a new environment. That incentive will always be there. So the network architectures that enable other people to build networks will be at an advantage over other groups which are trying to compete with those networks.
Yeah, it's a super interesting point. Yeah. Specifically as it relates to these large centralized exchanges launching DEXs, we're seeing more and more of the share. These top tokens over the last 6 months have all been launched on DEXs first, right, which is massive. If we look at the growth of stablecoins, a lot of this growth is being driven by DEXs. DEXs fundamentally have this one limitation, which is assortment. There's two things, assortment and it's the ramps. Still today in America, it is dang hard. This boundary line between fiat and crypto is a war zone. And it's even more violent on the way out of crypto. And so what the exchanges are doing is that they're providing this way to get cash into them that DEXs fundamentally have not been able to do. But the other thing is, remember what happens on EVM? You trade EVM. You do not trade Solana tokens. You do not trade Bitcoin. So this assortment question is really, really foundational to DEXs. And having a centralized exchange up there that can help to manage that is an advantage. Now, what do you do if you're trying to launch a DEX on this stuff? Well, you got to be dang thoughtful about deep cryptography, right? How do you actually get multiple assets working on your chain without introducing crazy multi-factored counterparty risk, right? And this is the issue where I'm super fascinated by this response, by the way, on the millions of different tokens and blockchains, because how you do that without introducing this compounded risk with wrapped assets, right? What we're really after is native assets, so you can strip away as many of those trust assumptions as you can, right? This is, like, I think the key thing that we're focused on there. So in answer to your question, I think that the people that are driving distribution and liquidity, those two things are like the secret sauce to a lot of this, and add 2 scoops of developer interest and activity, which as a category of crypto, we've just not been very good at. We still are waiting this massive wave of developers to come in, which may actually be robots.
Got the full recipe there. Actually, Rio, I want to throw the same question over to you as well, because you're working on tokenization right now in a different market. But I guess you're looking at there could be some jurisdictional wedge that you can like get into in a certain market, but blockchains are to some degree inherently global. And so I guess like when you're looking at more from a jurisdictional basis, what edge can you bring over a global blockchain?
I think the integration and the partnership with existing TradFi company will be important for foundation the chain developer thing. So in Japan, so we work in the SBI, so they can provide any licensing, the business and the financial world. And out of the Japan, I think we need to partner with the other financial institutions. I think they can provide a KYC, AML, and also license of the securities something or banking something. So I think the integration with the TradFi institution will be next trend. It's kind of integration with foundation and TradFi company. That will be the next trend, I believe. They can provide AML, KYC, and license. And then so based on that, so I think the developer can do provide a DEX on a different decentralized finance. I think.
Gotcha. Thank you. Running up on time, so last question here, and I want to get more of a prediction looking at where does the state of the market go from here in terms of blockchain networks? Are we going to see a massive expansion, a contraction, a stabilization in the number of chains? I think we know where Dan stands on this, but I also want to know why, like, what is going to drive that expansion or consolidation from here? So, Alan, I'll start with you.
Yeah, but I think like if you just look at the funnel, right? We probably have about 500 million so-called token holder globally combined it. I think that number is going to go to 1 billion very, very quickly over the next few years. I'll give you guys a couple examples, right? Like if you look at Asia, for example, the deregulation is actually has begun, right? It's kind of like a couple months, half a year slower than US, in general. For example, in Taiwan, right? Taiwan has 25 million populations, currently maybe about 1 million in terms of token holders. And the biggest telecom, the Taiwan Mobile, and the same family also owns the second largest bank, the Fubon family, just came out and announced their own crypto exchange and wallets and stablecoin, whatever. It's going to come out by the end of the year. They have probably about 17, 18 million users just by one company. So I was on a call with the CEO last week. I was like, well, what's your goal next 18 months? And he's like, 20% conversion. So 20% conversion is going to bring roughly about 3 million new token holders on top of blockchain. So that means that market is going to quadruple, offset it, right? Similarly, if you look at Hong Kong, like Futu, basically the Robinhood of Asia, has 4.5, 5 million users in Hong Kong. And currently Hong Kong maybe has about 300,000, 400,000 token holders combined, right? It doesn't matter which platform you hold, by the way. So if they get to also 10%, the market's going to triple or quadruple as well. Japan is cutting the tax. Korea is enabling institutional servicing right now. Vietnam in about probably 2 weeks from now is going to announce full license, right? So it's like if you look at all these major moves, a lot of users is going to come. Problem is where they go, right? So I think that is one on the upper funnel, but also you can think about the lower funnel conversion. I think one thing that Web3 has not done very well is the conversion between token holder, the capitalist, or more just for financial gains, and the actual use case, right? If you look at like last month, right, the actual number of user is maybe like 2.5% of all the token holder is actually using Web3 on-chain products. So the conversion is incredibly low, right? So that means we are basically a digital ghost town. There isn't many differentiated content. There isn't many things that's usable. So if we can also grow that part, then I think you get all of a sudden, with both the upper funnel and lower funnel conversion increase, we could see 10x of the Web3 users within the next 3 years.
Go ahead, Dan.
I think you have to ask yourself, do you think we're in the horse and buggy or rocket ship era of our industry? And my theory is that we are still in the horse and buggy era. So technically, everything we look at right now is not settled science. I think from there, then you have to start taking your bets and theses about investing or building or distribution. And in that world, how do you prepare? I don't think we're building on some very defined concrete surface. I think it's very much shifting sands. I think with these upcoming cryptographic primitives, like FHE and MPC and ZK and TEs and all these, like, we're going to create fundamentally new systems. Simultaneously, Bitcoin is going to wake up. And once Bitcoin wakes up and can do a lot of the similar things that other systems can, then you have to ask yourself, what playground do you want to play in?
So Ryan, over to you. Why? Last part. Why? Did that just go out? How do you see the market playing out, and why wouldn't SWE be the home of all global finance?
Well, I can tell you right now that the Bitcoin stuff is huge, and I want to double down on this point. It's I think it reached 70% crypto dominance last week. This thing is massive, and if it does what we all think it's going to do, a lot of us do, Bitcoin is going to have a huge part to play in all of these DeFi ecosystems. And the problem is, it's like trying to program the Voyager satellite. It's way out there in space, right? It's got 1970, well, I don't call it 1970s era, but it's relative to the area that we're in. I agree on the horse and buggy thing. And this asset is going to have to be treated with respect as the precious asset that it is on these, layer 1s and layer 2s. I'll just add one thing to this. SWE at this point in time has a not insignificant amount of the total assets on chain being Bitcoin or Bitcoin derivatives, and that's only going to be going up, right? So we look at across the industry, there's only 1% of Bitcoin that's taking a ride in DeFi, and that's very important for everybody to mention. And over the last 4 years, guess what's happened? It's the same Bitcoin. It's not getting any bigger. The synthetics are staying where they are. So what's going to have to happen here is a comprehensive rethinking of the way Bitcoin is going to be treated in DeFi. It's going to unlock the ecosystem in a way that we don't even realize yet.
Perfect. Thank you. I think that's all the time we have. Thank you guys for coming.